Hello and welcome to another session of the Let's Get Technical series. I am Kavita Agrawal, the founder of EXP-Invest, and we are here to talk about some hacks for the bearish market. Now, a lot of us here are swing traders, however, we experience issues when the market turns bearish. Is there a way to protect our capital and even grow it during the bear market? Yes, there is. So, in this session, we are going to talk about how to manage our capital in a better manner to, first of all, protect it from the downside because the market is very bearish. Second of all, also grow it because there are opportunities in the bear market also, but they are a little bit more hidden. So, let's get started with the screen share. And just to remind you, in this session, after I'm done with my discussion, I am also going to talk to you about your stock queries. So if you have stock queries that you'd like to discuss, please do go to my link expinvest.in/stock request. I am putting the link of the form which you need to fill out to submit your stock query for the analysis in the session in the comment box. Please click on that link and fill up the form with your stock name and your cost price properly so that we can get started. Okay. All right. We have Gaurav ji with us. Namaste to you. And let's take a quick look. All right. Everything seems quite set. Things are going smoothly. So let's get started with the charts. So as you can see, this is the chart and here is the link on the screen where you need to go in order to submit your stock request. I'm going to leave it there for a while. Now, we'll take the example of Bajaj Finance here, right? This is the 75-minute time frame and this is the daily time frame. Now, what you will notice on this chart, for instance, I have marked some white lines on the RSI. What these white lines is doing is very simple, and don't mind all the other lines. It's part of my study. Last few days, especially last couple of months, I have been engrossed in deep study of price activity in order to identify the trend, the change in trend, opportunities in bearish market and what they look like. I have been using these vertical lines. Now, the use of this vertical lines is explained in great details in my advanced technical analysis training program, which is all about swing trading and the ecosystem of swing trading, right? Now, these white lines on the RSI of the daily time frame, RSI 20 period on the daily time frame, they show me where the range shift has happened. So you see somewhere, sometimes above the level of 60, the white line is higher. Sometimes it is more high, sometimes it comes down low, sometimes it's high, sometimes it's low again. So just focusing on these white lines, these are called range shift. So the RSI has a tendency to shift its range depending upon the price activity. So if I can just expand this price action here and show it to you, what you will see is, as a matter of fact, whenever the range shifts to negative or whenever the range shifts lower, the price is declining. And then before the price actually starts going up, we see a positive divergence and the range shifts upward, right? That is when the price also goes up. There is a negative divergence again and the price starts falling downward, in which the range shifts again back low. A lot of us have already come across the concept of RSI positive and negative divergence. Now, what is RSI positive or RSI negative divergence? RSI positive and negative divergence is simply the point where the RSI shifts its range from bearish to bullish. Obviously, it is not foolproof and it is not safe from failure. The range shift or the divergence sometimes can also be fake. So we have to have strong risk management strategies in place. We need to always trade with stop losses. Now, what is the hack that I'm talking about when it comes to swing trading? There are two elements to it. Number one, when you're trading in a bearish market, your decision-making mechanism has to be stronger. Your stop loss revision mechanism has to be stronger. All right. When you're entering a stock after a correction in a bear market, you have to seek additional confirmation. So for instance, in this stock of Bajaj Finance, you can clearly see right now that the price is in a bearish range. So let me increase the brightness of that highlighting tool so that you can follow me better. Yeah. So I'm going to remove this and we're going to start again. Now, In the stock of Bajaj Finance, what we can see is that there was a top forged here somewhere in the month of October 23. Right now, overall, the market has been rallying and has reached a new high since around 27th October 23. However, what you can see is Bajaj Finance has not participated in this rally at all. Neither has most of the financial services sector. But what I can notice here is that here at this point near this major resistance as written here, Bajaj Finance specifically topped out and it has been correcting since then. This correction began with a RSI negative divergence. The negative divergence was forged between price and RSI. Most of you will know what a negative divergence is. A negative divergence is a phenomena where the price makes a higher high, but the RSI makes a lower high. Okay, so there was a divergence and a subsequent range shift. Now, in this bearish range, what you will see is number one, there was a period of uptrend. What happened here? So, sometime in the mid of November, the price bottomed out and it rallied around 12% in 51 days. I wouldn't say that's a very bad return. Okay, now let's go down one time frame lower to study this change. So what I'm going to do is I'm going to highlight this part so that we can study it on the 75-minute time frame. On the 75-minute time frame, let's expand this chart. What I want you to do is look at the RSI. So because the 75-minute time frame is a lower time frame than the daily time frame, it is naturally more sensitive to price action, right? As you go lower and lower, the sensitivity to price action increases. So when we study the 15 minute, the 3 minute or the 5 minute, they are way more sensitive to the price action tops and bottoms. Okay. Now, as you go lower and lower, your holding period, your analysis period, the shelf life of your analysis keeps on decreasing. This is also the reason why doing very short-term trading is very difficult, because it means that your workload is immensely high, because whatever analysis you're doing, even though it's taking the same amount of effort as doing long-term analysis, the shelf life or the validity of that analysis is extremely small because of the small trading period. Now, what you can see here is after the first wave of the correction got over, right? After the first wave of correction got over, the RSI or the 75-minute time frame reached the level of 30. Next, what happened? So this is where the RSI reached the level of 30 on 75-minute time frame. The price continued to dip lower, forging another low. And here, incidentally, we also see the EMA of the 250 period of the daily time frame present here. So this EMA support plus the formation of this beautiful RSI positive divergence, right? Higher low versus a lower low in price, higher low in RSI versus a lower low in price. So this positive divergence was our cue. However, I told you that in the bearish market, you need to be more careful. So we cannot participate in the long side in a stock which is experiencing bearishness, or in a sector which is experiencing bearishness, or in a market which is experiencing bearishness simply on the basis of one or two indications. We need to go a time frame lower. So here, if 75-minute is my decision making time frame, what I need to do, number one, is I need to make sure that the daily time frame is in a bull trend. If the daily time frame were bullish here, that is, this negative range shift had not happened, and mind you, by the time the price reaches this low, the negative range shift hasn't happened. What has only happened is a negative divergence. But we already know that negative divergence is the beginning of a negative range shift. So essentially, you should be super cautious when you're taking a trade setup in such a condition. Now, if the entire market is bearish, then obviously the opportunities are very low. So you might have to go one step further, and this is the moment of the hack. So now we'll go down one time frame lower to the 15-minute time frame. And here you will look for the moment of eclipsing, which means you will participate in the stock only if the 15-minute time frame has become bullish. Because remember, the daily time frame analysis helps you make and maintain positions for maybe 3 months to 6 months. The 75-minute time frame helps you for a few weeks to up to 3 months, in my opinion. The 15-minute time frame helps you maintain positions for some days to some weeks. Okay, and as you go lower and lower, your shelf life of the analysis or your horizon decreases. So what we are doing here is we can notice that, okay, even though the daily time frame is bearish, we got to the 75-minute time frame and we sought a support there from the level of 30. We saw a positive divergence get forged on the RSI. Then we are going to the 75, the 15-minute time frame. And on this 15-minute time frame, here, okay, let me delete some of these drawings now, some of these highlight tools. On this 15-minute time frame, what you will see that there was a knee-jerk reaction, sure, but a double bottom got forged here. If you take a look at this bottom and this bottom, they're almost at the exact same level. Not only that, the RSI on the 15-minute time frame has forged a a 3-point positive divergence. What is the point at which you're supposed to take position? All right, let's use this white line. Now, using this white line, what you will see is that there is a strong negative range unfolding on the RSI. Up to what point? Up to the point where for the first time the RSI breached above the level of 60. So what you essentially have to do is you will use an alert and you will place the alert at the level of 60 on the 15-minute time frame. Every time the level of 60 gets breached, you will analyze the chart and you will see whether it is sustaining itself. So essentially at this point, what would have happened would be that the price came to retest the previous high, but the RSI forged a higher high. So a positive divergence plus a higher high on the RSI against a similar kind of a high and a same low on the price. This is an early indication of a positive range shift, which indicates to me that in the short term, my trend can turn positive here. When would be the point that I would enter? I would wait for a pullback. On the RSI, now that the trigger of 60 is gone, I will set another trigger somewhere near the level of 40 or 45, depending upon the past trend analysis. What do I mean by past trend analysis? I will go back on the chart and I will study what has been the support level for the 15-minute time frame when the underlying trend in this specific stock was bullish. So for some stocks adhere to the level of 35, some adhere to 40, some adhere to 45, and this also changes from one bull trend to another. So you take a level where, you'd have a good possibility of getting a trigger, you wouldn't miss it, and it wouldn't be too high also to make it too obvious. So here, once the stock pulls back, so this is the point where the stock would pull back, and this is exactly where your entry would be. Now, you might think this window is too specific, but if I give you a calculation, this is actually a good 5-hour window where you can enter. Now, this is actually what makes trading very, very difficult. In order to facilitate the entry in this tiny little window, you will essentially be monitoring this stock for more than 43 days. Okay. And this is also what makes trading a very difficult job, because the activity window is actually very small versus your analysis, your monitoring window is a lot longer. Planning takes way longer, execution takes a little bit of time. The reason why so many people are unsuccessful in the market, especially during the bear market, is you're not giving enough time towards analysis. Instead, you're spending a lot more time behind execution. If you keep executing trades and if you don't go back to study what you've done right versus what you've done wrong, you will never be able to grow. All right. In this effect, I also want to show you an illustration, but I'm going to save it to the end of this video. So make sure you stick around because that is going to be really mind-opening for you. All right. Now, once you've created this position, you have to protect your capital from downside. And when you plan your trade like this and enter, you have a very obvious, very clear-cut stop loss level. So when you enter in this decision window, your stop loss will be somewhere around this level, right? So this becomes your stop loss. And what would be your target? The recent high, I would say, be your target. Okay, so let's assume that is our target. How much is our risk reward ratio? From this level of around, say, let's take the higher end of the decision window, 7,120. Your stop loss would be around 1.5%. And on the upside, your target is 7% at the onset. And if you're trading on the basis of the 15-minute time frame here, this target would have been achieved within a period of less than 1 month or somewhere around 3 weeks, right? Another trading opportunity would have presented itself after a few days when the stock declined around 5%. Again, here we see that the stock came into good support at the level of 30. This is where we'd enter and go to carry on the trade, go and create a position in the trade. What is your takeaway from this analysis? When you're in the bear market, okay, first of all, you look at the largest time frame, which is in our case, the daily time frame. If the greater time frame, the daily time frame is in a bear trend, you need to come not one but two time frames lower. So if you've been watching the Let's Get Technical series, I have been talking about the decision making time frame. It's a concept which I have coined after 12 years of experience in analysis in the market. And I have realized that different stocks have different personalities and different stocks need to be analyzed in different conditions. So if you want to make the correct decision, you need to identify a very limited set of watch list where you will trade so that you become good at trading in these specific stocks. You know, it's like having your own group of friends that you can lean on, that you know whose behavior is predictable, right? So once you have this watch list, you identify the decision making time frame, you identify the kind of movements it's capable of giving. Some stocks are momentum movers, some are slow movers, some are super trenders. It's very important to identify what is a decision making time frame and what is a movement style of stocks or personality of the stock like. And then on the basis of that, you can do further analysis. Now, if the primary trend is bearish, you need to go two time frames lower. If the primary trend is bullish, you can also make a decision on the basis of just one time frame lower. That would be a decision making time frame. Okay. So for instance, here if my decision making time frame is daily, then what I would do is I would look for, in a bullish market, I would look for RSI to take support at the level of 31st on the daily time frame and then give me a positive divergence. Make sure that the volume analysis fits into my viewpoint. Make sure that there are no red flags in terms of negative patterns, bearish patterns, or the weekly time frame doesn't look bearish, or the 75-minute time frame is not giving a counter story, so on and so forth. But if daily is my decision making time frame and I want to make a short term swing trade on the long side, right? In a bearish market, I want to take a long trade, then I will go two time frames lower, that is to 15-minute time frame, and I will seek positive signals there. Of course, my holding period is going to be shorter here because the overall market is really risky. So the analysis amount of time you will spend in analysis and seeking confirmation is going to increase significantly, but it is possible to have a system and come out of the stormy season as a winner. And in order to emphasize that, I want to show this illustration to you, or rather I want to perform this illustration for you right now. Give me a moment to put this together. All right, so now you're looking at my paint tool. Now, focus on what I'm saying. I'm not very great at drawing, but it is the message that matters here. For instance, when the market is bullish, you move up, right? Your portfolio value moves up, and then the correction comes. If you're not using capital preservation techniques, or if you're not using risk management, if you're not doing proper capital allocation, what is going to happen is your capital is going to again slide down to the starting point. Again, the market becomes bullish, your portfolio grows. Again, it turns bearish, but since you've not adopted good practices, you've not done tax loss harvesting, your portfolio drops. As such, you can end up in a vicious cycle. Worst case, another bad scenario would be you enter the market, you experience beginner's luck, you see some growth, but you fail to perform either tax loss harvesting when the season comes, or you fail to perform proper risk management strategies. As a result, your portfolio drops and you lose capital. All right. Now, again, when the market becomes better, you grow your capital again, but because you did not learn from your mistakes, your capital drops again. So this way you begin to spiral downward. Versus the third scenario, where you enter the market in the bull trend, you experience some good growth, but you take a mature approach to it and you put in place some risk management strategies. You use stop loss, you take help from a SEBI registered research analyst, you do things in the right manner, in the intelligent manner, in a smart way. As a result, when the market turns bearish, there will be some loss that is inevitable. However, you will be able to cut your losses short and preserve your capital. When you're able to preserve your capital and the growth it has experienced during the bull market, when the bull market comes back, and it will come back, it is inevitable for the bull market to come back. When it comes back, you will be able to grow again, and you will be able to continuously grow in a spiral upward. I know a lot of spiraling upward fashion. A lot of us have the expectation of growth being like this, but That is rarely the case. Now, if I were to show you this same drawing on a linear chart, it would look something like this. You go a little up, you go a little down, you go a little up, you go a little down, you go a little up. Now, if you're looking at this and if you're thinking this looks similar or familiar, you're absolutely correct. This is exactly how the market unfolds. And if this is how the market is unfolding, then obviously this is how your portfolio is also growing. So you need to make sure you're using proper risk management strategies and capital allocation. And if you're somebody who's new to the market, it's very important that you take help from a stock market research analyst who has expertise and offers services that align with your goals. Now, in that, speaking of which, I would also like to invite you to join my Telegram channel. This is my Telegram channel, Trade with Kavita. I will drop the link to this channel in the chat box, and in this channel, I share information about my webinars, link to my Trade Together program. The Trade Together program is a swing trading subscription service where I give you actionable advice to buy stocks, trail your stop loss, and exit the stocks at the right time. Of course, there are seasons when there are lots of stop losses that get triggered and loss is incurred, but my objective is always to preserve your capital first and then help you grow it, right? There are other services like portfolio management service and so on and so forth. All that information is present in the Telegram channel. You can simply click on the header and connect with me or my team to get more information about that. Or you could also just go on the website, the link of which is mentioned all over my Telegram channel, and book a call with me or my team. Now, with that, let us move towards resolving your stock queries. I hope this session has been valuable to you. And if yes, then please don't forget to give a thumbs up to this live stream. And if you have stock queries, hop over to this link, which is exp-invest.in/stock request, and start filling the form. Fastest finger first. Now I can see there are already 82 responses. So I'm going to quickly go over to the sheet and let's start solving your responses. Now remember, if you're also enjoying what I'm sharing with you and if you want to learn more or watch my previous videos, I'm also going to drop the link to my YouTube channel where you can find the past videos edited and added. So these are fast forwarded, the word gaps have been removed, and it's just been made a little neater. So if these sessions are like 45 minutes long, the edited video will be maybe 30 to 35 minutes tops, right? So last week, by the way, I did a session on tax loss harvesting. Remember, there is still time left for you to invest your, to protect your capital from, to save some taxes on your capital. So just make sure that you watch this video and perform tax loss harvesting, especially if you've entered the stock market in the last leg of the journey. All right. Okay, let's now start with looking at the stock requests. So we have, so all of these are done and all of these are done. Now let's address these. How many are these? These 10 queries today. All right, I am going to hide the sheet. All right, now the first query that I can see is from Mr. Yashwant Shikha. He's asking for PNC Infra. All right. So I just happened to take a look at the comments and I see Sulekha ji is asking, can this be used for bank nifty options trading? Absolutely not, because options trading is a very different tool in this analysis, which I have just told you. It refers to price action analysis. When you do options trading, you need to do a lot of different analysis, options strain analysis. You need to analyze the Greeks. You need to determine your action in a more strategic manner. So guys, please remember that options trading is not a tool suitable for retail traders to trade in. If you want to grow consistently in the market, opt for the more boring and the harder option, which is swing trading in the market or cash segment trading. Stop working with leverage, because for some time you will grow and will feel really great, but it's very hard to sustain that growth. And also when the string of losses come, which is inevitable in the market again, when that comes, the loss takes away more than your realized profits. And remember, this realized profit, you will end up paying taxes on that. So the loss that you book again will be all yours. All right. Now, Satish ji, please mention your stock queries in the form. I will not be taking stock queries from the comment for the sake of adhering to some sense of structure, right? So Aditya is asking how can he take calls from me and how can he learn? So Aditya, you can join my Telegram channel and see my workflow. If you find my knowledge and my workflow suitable for you, you're more than welcome to join my Trade Together program and my advanced technical training program. All right, let's see. Shreya, kindly fill up the form. Awesome. Let's also quickly take a look here. So we've got Gaurav with us. We've got Poonam, Mr. Chaudhary. We've got Mr. Hedge. Awesome. We've got Pranav, Prakash ji, and so for all stock queries, everybody is requesting. Everybody is requested to fill up the form, and we have Mr. Ash Ritz. He's saying that stocks are hitting stop losses, and he is very upset with that. Now, Ash, would you rather that your stocks hit stop losses, or would you rather that your capital gets eroded? You know, when the market correction comes, even though there are significant signals available on the charts, still you're in the market to take risk. And when you take risk, it means it's going to be hit or miss. Sometimes there will be profits, sometimes there will be losses. So you have to learn to be okay with the loss. And if you don't learn to do that, if you're feeling angry, if you're feeling regret, if you're lashing out, then that means you have a weak psychology for trading. And you need to become better at dealing with your psychology first. How do you check to predict what extent correction happened in particular stock? I mean, how do you make sure this is enough of correction? Mr. Chaudhary, there is no way to 100% make sure. There is a certain probability that you can attach on the basis of price action analysis. You can take a look at momentum analysis combined with volume analysis, and that can be a good enough signal for you. So usually when the price is about to reverse, just like when a car is about to turn, you can tell that the car is going to turn because it'll decelerate, and then it'll start, the wheels will start turning, and then the car will turn, right? So there are these indications in the specific stocks or in the broad market as well that can be relied upon. And again, to Mr. Ash Ritz, whoever that is, I request you to reach out to me and let's have a conversation about why you're experiencing these emotions with respect to your trading. All right, now let's get started with PNC Infra. Do we have a cost price mention? 360. He's looking for a fresh position. So PNC Infra, I do see there is a negative divergence on the daily time frame. So a long-term or even a mid-term position would not be recommended here. There is some risk involved, but I see that the 75-minute time frame has just touched 30, and the 100 EM is also lending support to the price. Coming to the 15-minute time frame, there was a negative divergence, but I wouldn't say that the stock is really gone into like a bear range or anything. In fact, it has just completed a nice little pullback. So yes, PNC Infra looks attractive for a fresh position at 411. I would suggest you not to try to buy the stock above 424. So your buying range can be this, basically 400 to maybe 425 at tops, at max. And on the downside, your stop loss level should be somewhere around the level of 380. And you can buy this stock for a target of 475, which means from the current market price, your stop loss is around 7%, your target is around 16%. I personally wouldn't participate in the stock because the risk reward ratio is not more than 3. So my rule is always to buy stocks only if the proposed or the possible risk reward ratio available to me would be 3. However, what I would rather do is I would reduce the buying range and I would set a buy GTT order near this level of around 398 or maybe even 400. Then what happens is that my risk reduces to 4% and my upside increases to 20%, right? So what you're essentially doing here is you're manipulating or you're managing your cost price to get a higher risk reward ratio. This is very important. And remember, in the market, every point counts. So, Mr. Yashwant, that's for you. Now for Nikita, let's take a look at Nykaa Fashions. She's been holding it since listing and the stock is at since 224. Okay. So let's take a look at Nykaa for Nikita. 224, massive loss. So Nikita, I would definitely recommend you to first of all do some tax loss harvesting here. You have a good opportunity to, the market has been pretty bullish in the last 1 year. So there's a chance that other investments in your portfolio have done well. You've booked some profit. It doesn't make sense to be sitting on so much loss, waiting for break even while paying taxes to the government on the profits which you've already made, right? So if you can set off some of that profit against this loss, you will be able to reduce your tax liability to the government. This is called tax management. Now, with respect to Nykaa, I am not particularly bullish at this point. First of all, Nykaa is a growth stock, and which makes it super risky to trade in. And since the overall market's sentiment is quite bearish, I wouldn't bet on the stock. It's a good time to actually bet on value stocks, not on growth stocks so much. Also, key support level at the level of 151 has recently been breached by the stock, and the momentum indicators or the volume analysis is not suggesting much upside here. So I would recommend you to exit the stock and book the losses in Nykaa. Ajit is asking for analysis of HDFC Bank. Can it do better in the coming days for swing? His cost is 1460. So slight bit of loss, but I would, from what I can see, the underlying trend is still quite bullish, even though the overall market has declined quite a bit. Also, the stock has kind of tested the level of 30 on the daily time frame 2 times, which is good. And it has also created a bit of a low and a very small positive divergence, right? So this looks like positive to me. So I would suggest please maintain stop loss at 1366. And from here, if you want to average it out a little bit, then I would suggest you set a GTT order somewhere near this level around 1412 or 1425. Between that range, you set your buy order so you can average out your cost a little bit. And on the upside, I see the stock gunning for this resistance zone and filling up this gap for sure. So my target for HDFC Bank would be around 1600 rupees. Now moving on, so we've already answered one query for Nikita, so we will move on to Sambhav. He's asking for Manyavar's analysis, 163.4. That Manyavar, right? He says his cost is 163.4. So it's probably a very, 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 very long term. No, this doesn't look right. So I'm guessing either the stock is wrong or the spelling is exactly the same, but the cost price doesn't make sense. So I'm going to ask Sambhav to input the correct cost price and circle back on this, fill up the form again. So Lokesh G is asking for Adani Green. He's bought it at 1903. Should he hold it? Can the target be expected in 3 months? All right. So Lokesh G ke liye, let's take a look at Adani Green. So on the daily time frame, I think you should absolutely exit right away because there is a big negative divergence unfolding, and I'm not sure if you've bought this recently or whether you've been holding it for a long time, but I also see negative range shift happening on the 75-minute time frame. Key EMAs have been breached, and the stock is definitely prepping to go down deeper and lower. So I would not recommend you to continue to hold Adani Green. My recommendation to you would be to exit the stock immediately because more downside is expected. Now, Prakhar has analysis request for Kolpal. He's bought it at 2640. What are my long-term views on this, and do I expect a short-term correction? So are you a little bit confused here, Prakash? You're asking for long-term view and you're also worried about short-term correction. That doesn't seem a little bit right to me. But let's take a look at the stock. So beautiful unfolding rally and still looks very bullish if I have to tell you based on the weekly time frame. So I would suggest that you keep holding on to the stock down to the 75-minute time frame from the weekly, daily. Everything looks very, very bullish here, including the 15-minute time frame as well. In fact, the dips are a great time to buy the stock. So go for it. Keep holding on to it. Maintain a stop loss, however. Over here, especially for since you're a long-term holder in this stock, I would recommend you to maintain stop loss at around 2466, which is not a very big stop loss for a long-term holding, right? It's just 7%. But the momentum of this stock is just so good that I'm sure you'll be able to get away with that. And it's very hard to give a target because the stock is in virgin territory. So there is no target, but my recommendation to you is definitely to continue and hold the stock. Now, Swananda, welcome back. He's asking for the analysis of Adani Power. Is this a good time to hold and make a buy or exit? Are you interested in buying? Are you interested in holding? Or are you interested in exiting? What is it? I will analyze this on the basis, on the assumption that you are holding this stock right now. And what I can see is that the daily time frame does not look bullish anymore, because there is a strong negative divergence despite of the price still being close to its highest. And I would think that the price is primed for a correction. So if you're holding the stock for the short term, I would strongly recommend you to exit it. That being said, I also see a 5-wave upside already complete. So this is the wave that I would expect to go into correction really soon. And even if it does a very small correction of just 23.6% on the Fibonacci scale, it would still see itself at 412. And usually Adani Power, by the way, has a tendency to take much deeper correction, maybe 61.8 or 78% corrections. That kind of correction would mean that the price can find itself testing the 200 EMA of the weekly time frame down to 260 levels. So I don't think Adani Power is a good candidate to either hold for short term or long term. My recommendation to you would be to stay away from the stock. All right, so Rameshwar ji is asking for NBCC at 95.5. Couldn't book profit, can go for long term, should hold or should re-enter. So Rameshwar ji, your comment gives me the opportunity to segue into a very important thought process here. I see a lot of short-term traders initiate positions with the intention of booking profits if they see good returns in the short term, but become long-term holders when they see losses, right? So if I have to give you an analogy and explain what you're doing here, what you're essentially saying is that, okay, I'm going to meet this person. If they treat me well, I'm going to become friends, but I'm going to leave them. And if they treat me badly, I'm going to go ahead and marry that person. It doesn't make any sense, right? So if you are entering a stock for the short term, make sure that you stick to your short-term view, irrespective of whether you see a profit or a loss. When you're very overly concerned about booking a loss, what you're essentially doing is you'll be underperforming in your portfolio because you're not using your capital optimally. You need to understand that you have limited amount of capital, and if you've decided to use that capital in your business of swing trading or short-term trading, you need to churn that in a way that it generates margin for you rather than it gets stuck in a stock which is not giving you good returns. Okay, so never buy a stock and become a long-term holder because it's giving you a loss. Rather, cut your losses short and invest that capital somewhere where there's better opportunity available. Okay, with that, let's move back to NBCC analysis for the cost price of 95.5. So you're still in profit. Okay, on that note, by the way, NBCC does look like it has upside to go. I'm getting the sense that you will see an opportunity to book profits again. So if the stock retests the level of around 174, 175, I would suggest you exit and book your profits. Also on the 75-minute time frame, I can see a positive divergence. On the 15-minute time frame, I can see positive range shift. So NBCC all in all is looking quite attractive for a fresh entry or adding to position. So you might also want to use this particular point to add more to your NBCC position and average your cost. All right. So with that, let's go full screen. All right, let's take a last look at some of the comments, which some of the really kind members might have added. All right. Looks like Swananda is having an issue with the form because the HTTP is not mentioned. So I'll request my team to please share this link of stock request form, which I am going to put in the comments on the YouTube channel moving forward. All right, so this is a stock request form. HTTP has been added for your efficiency. What will help us grow, ma'am? Tejas, I don't understand your question. If you can be a little bit more elaborate, it will be great. Mr. Chaudhary is asking, how do you check or predict to what extent the correction happens? We've already answered that. All right, so for everybody who couldn't find the form, I have already put the link in the comment section. Mr. Vaibhav, I will again request you to please fill up the form, and then I will be more than happy to help you out, or you can go on my website and book a consultation session. Okay, looks like we've come to the end of the session. Thank you so much for joining me today, and I hope I was able to tell you or teach you something new. I will see you again on Friday in the Market Outlook series, where I bring to you analysis of Nifty, Bank Nifty, and the intersector charts, because we want to put our money where the momentum is flowing. All right. So with that, I'll take your leave. Thank you for being such a great audience. See you on Friday. Namaste.